All right, it is 10 o'clock. Let's go on the record, please. I'm Charlotte Mitchell, Chair of the Utilities Commission, and with me this morning are the following commissioners. When I call your name, please announce your presence. Commissioner Gray,
Aye.
Commissioner Clodfelter,
Yes, good morning.
Commissioner Duffley,
Good morning.
Commissioner Hughes,
Good morning.
and Commissioner McKissick.
Good morning.
In compliance with State Government Ethics Act, I remind members of the commission of our duty to avoid conflicts of interest and inquire at this time as to whether any member of the commission has a known conflict of interest with respect to matters coming before us this morning. Okay, the record will reflect no conflicts were identified, so we'll proceed with public staff communications. Item P1, Ms. Profit, you're up.
Good morning. Item P1 presents interconnection agreement amendments by AT&T, North Carolina, and Frontier that were filed for commission approval between October 21st and October 29th of 2021. The public staff has reviewed the filings and recommends that orders be issued approving the interconnection agreement amendments effective on the date they were filed. The public staff has provided proposed orders to the commission staff.
Move approval.
Second.
It's been moved and seconded that the item be approved as recommended by the public staff. Are there any questions or discussion on that motion? All right, hearing none, I'll call the roll for a vote. Indicate your support by saying aye and your opposition by saying no. Commissioner Gray,
Aye.
Commissioner Clodfelter,
Aye.
Commissioner Duffley,
Aye.
Commissioner Hughes,
Aye.
Commissioner McKissick.
Aye.
And for the record, I support the motion as well, and the motion carries. All right, thank you, Ms. Profit.
Yeah.
All right, we'll proceed now to public staff. Water item P1, Mr. Junis, you're up.
Good morning. I'm Charles Junis, Director of the Public Staff Water, Sewer, and Telephone Division. Water item P1 in docket number W218 sub 526A. On November 1st, 2021, Aqua North Carolina Inc. filed an application requesting authority to adjust its water system improvement charges and sewer system improvement charges effective January 1st, 2022. The public staff has reviewed Aqua NC's stated WISC and SIC improvements, and based on this review, the public staff is recommending 4 adjustments to Aqua NC's proposed WISC and SIC revenue requirement and percentages that are discussed in the agenda item. The company agrees with the public staff's recommended adjustments, except for the adjustment to impute the 2% invoice discount for well meter purchasing. On January 12th, 2022, Aqua NC filed a response to the notice of the public staff's plan to present comments and recommendations at staff conference on January 10th, 2022, which was filed on December 22nd, 2021. Presentation of the public staff's recommendations was postponed to today for the company to provide discovery responses. Regarding the contested adjustment, Aqua NC implies that it would not be easy for it to modify its invoice payment process to pay invoices within 15 days, but does not provide any material information to substantiate this or any other basis for full recovery of the well meter purchasing costs. Therefore, it is the public staff's position that Aqua NC has failed to meet its burden of proof to justify recovery of these costs. Public staff recommends that the commission issue the proposed order approving the public staff's recommended water and sewer system improvement charges effective for service rendered on or after January 1, 2022, subject to true up. Thank you.
All right, thank you, Mr. Junis.
I move approval.
All right, Commissioner Gray, let's hold off for 1 minute. I have a
Yes,
couple of
yes.
questions
Thank you.
for,
I'll hold.
all right, thank you, sir, for the company as well as for the public staff. Mr. Junis, I'll start with you. There you are, just making sure I can see you on my screen. All right, Mr. Junis, will you clarify for me that the only remaining issue and dispute on this agenda item is the 2% invoice discount?
That is correct.
Okay. Are you aware of other instances where Aqua has received invoices for capital projects or expenses that included this type of discount, a discount if paid early?
I'm not familiar with any. We were drawing a comparison to basically a late fee that just as if you would pay after 30 days is common. You would receive a late fee. This is similar to that. And being that Aqua is a professional, well-capitalized utility, that they would be capable of sort of capitalizing on this sort of benefit and reduced costs.
Okay, so are you aware of instances in which the public staff has taken the position or advocated for late payment fees to be disallowed?
Yes, and commonly the utilities would agree with such an adjustment.
Okay, thank you. And does your knowledge of such an instance for specifically where late fees would be disallowed, does the public staff take that position across industries, water, electric, natural gas, et cetera?
Yes, that would be my understanding.
Okay. Are you aware of any instance outside of the water wastewater context, for example, in the electric context, where their invoices it would include or have included this type of discount provision?
I am not specifically aware of such a discount provision.
Okay. You're just not familiar. You've never come across one, and the public staff doesn't appear to have an articulated position that spans the industries. Is that right?
Correct. I'm not familiar. I mean, obviously, I have had some role in some electric cases, but I don't recall of an instance directly comparable to this sort of discount.
Okay. Is the public staff aware of whether any of the payments on these invoices were made late, like post 30 days?
They were not made post 30 days to my knowledge.
Okay, so they were all timely made based on the terms of the invoice, just not necessarily made early to receive that discount.
Correct. They were not paid within 15 days to receive the discount.
Okay. Mr. Junis, another question for you, for the public staff, has to do with the materiality of the adjustment. So in this instance, the commission's approval of the public staff's proposed adjustment on this 2% invoice term issue really wouldn't change the percentage to customers, charged to customers, just due to the sum of money involved here. Is that correct? Is my understanding correct?
Yes, that's correct. It does not change the percentage, but it does change the revenue requirement that is trying to be generated or recovered by that percentage.
Okay. Does the public staff consider materiality when it makes recommendations on adjustments, or how does the public staff determine whether to make a recommendation for an adjustment?
Correct. We do consider materiality. I think this is also balances on that line of a policy that we want. There's a lot of discussion about buying power and incentives of sort of the corporate structure, especially with meter replacement projects. And this was an example that we felt that buying power or incentive was not taken advantage of.
Okay. Mr. Junis, last question for you. In terms of litigating these adjustments to the WISC-CISC charges, what is the public staff's preference here? Is it the public staff's preference to litigate these issues during the course of a rate case, or as they come up, sort of WISC period to WISC period?
It depends on the circumstances. I think it's clear for a bigger, complicated issue, like the costs of the residential meter changeouts. We've taken the approach that would be handled in a rate case because of the substantial record that exists there, and recognizing that it is not our intent, and I don't think anyone has an interest of having these sort of oral arguments at staff conference. We understand what staff conference's purpose is. And typically we would bring uncontested items here. However, given the sort of procedure, this is how it has worked out.
Okay. All right. Thank you, Mr. Junis. All right, Mr. Becker, I see you on camera. So I have a few questions for the company and we'll direct them to you. Mr. Becker, would you please, I assume that you have counsel present.
I do. Bob Bennick is on, I believe.
Okay, so Mr. Becker, just for purposes of the record, would you introduce yourself?
Sure. Thank you, Chair Mitchell. My name is Shannon Becker. I'm the president for Aqua in North Carolina.
All right, thank you, Mr. Becker. We've got a few questions for you on this invoice term issue. Can you help us understand what the company's payment policy is? I mean, in the filing made in this docket, the company states that the net 30 is the industry standard payment term, so payment within 30 days. Does Aqua, let me ask you one more question, then I'll sort of let you go there. Does Aqua receive this net 30 payment term from all of its vendors? I mean, is it Aqua's experience that this is in fact sort of standard practice?
Yeah, more pulling from my knowledge as a controller, net 30 is a standard payment arrangement. There are others. I can honestly say that I'm not familiar with the variation of what the standard payments are, but our policy is always to pay by the due date. And I would recognize, as Mr. Junis had brought up, that Aqua is a very large, professional and well-capitalized company with a lot of standardized payment processes, accounts payment processes, approval processes. And that being said, we do also have economies of scale with our purchasing department, where we are going to negotiate, in most cases, or in the larger cases with larger vendors, we're going to negotiate payment terms that take advantage of the volume discounts. So you're not, from my experience, at least with Aqua, I don't see many discounted payment arrangements. They're typically already negotiated with the larger vendors. And just to clarify, this was with the well meters, which is different than our residential meters. We purchase for residential meters, which is the high volume of meters, through a different vendor. The well meters are purchased through this one vendor, which is Census, and that's the one that the 2% net 15, not net 15, I'm sorry. The payment arrangement is 2% 15, net 30. That is the payment arrangement specific to that vendor.
All right, thank you, Mr. Becker, for that explanation. Why, so given this opportunity to save money on these particular purchases, why wouldn't the company pay within 15 days? What is preventing the company from doing this?
Yeah, Chair Mitchell, I don't know exactly what would prevent us from doing that without investigating it further. I will tell you that when this was brought up in our WISC findings from the public staff, that was the first I had heard about this discount with this vendor. So, I don't think the question or the challenge is, I would have to look into determining whether or not we could meet that turnaround time. It is net 15 from the invoice date. So the invoices are sent to us and printed on, I would assume, on the 15th. There's delivery time, receipt time, reporting time, approval time, coding time, and then we'd have to process it and turn it around and pay it within 15 days. Can that be done? Possibly. We have not looked into it. I would think that, does that answer your question?
It does, thank you. All right, last question for you, Mr. Becker. Would the company agree that it is a cost to ratepayers if a utility doesn't take the discount offered by a vendor or a third party?
I would say that it's a benefit if we are able to. I wouldn't say it's an extra cost. I look at this as, the the projects that we submit through the WISC SIC program or actually even through a rate case, are they reasonably and prudently incurred? And meeting the standard payment arrangements of net 30, net 20, whatever that might be, if we are not incurring a penalty, which we do not ask for recovery on when that does happen, and that does happen in the normal course of business when you have people that are out, invoices get sent to the wrong place. Sometimes we do have to pay late payment charges, and we do not request that of the customer as an added cost. This is a discount. So it would mean we would have to expedite things and potentially incur additional costs to be able to do that. Whether it depends on the volume of what would be needed to be able to do that, but expediting that could have an incremental cost that we haven't looked into. I think the public staff's position here with indicating that it is a penalty, not taking this discount as a penalty, is going against what is reasonable and prudent. It's basically saying that penalty is that we are not paying in a timely manner that makes these costs not reasonable and imprudent. Yet it's actually expediting something. So the size of this isn't a question. It's a very small amount. I think this is a matter of principle here. I don't look at it as a cost. I look at it as a discount. Late payment charges, which are a result that can result for various reasons, are not requested, and the customer is not burdened with those costs. The shareholders absorb those.
All right. Thank you, Mr. Becker. Let me pause here. Mr. Junis, I see your hand is up. Did you want to say something additional?
If I may, and if it would so please you, the company's had since December 22nd to investigate this issue and respond. They did respond on January 12th. They had their opportunity. I would also add that this is not just one invoice that maybe snuck through the process. These are invoices that they're receiving over months and months. And just in this request, I think it's between 10 or 20 invoices were processed and paid for these well meters. So, this is something that was expected and they've seen and should have recognized. I could understand maybe if it was the first invoice you received from this vendor and you were unaware of this discount and you didn't make that payment the first time. But for it to happen over and over again and then to not have an explanation why they didn't take advantage of that opportunity, we struggle with that, and that's why we're making this adjustment.
All right. Thank you, Mr. Junis. Mr. Becker, since burden is the company's, I'll give you the last word. Any response to Mr. Junis?
Yeah, I'll just again summarize the fact that we are a very large company processing thousands of invoices monthly. So whether we knew about this December 12th and it's now January 18th, turning a process around and picking out a couple invoices in between that time without actually investigating what needs to happen, operational situations exist. It's year end. We are implementing SAP. There's lots of reasons that I could offer as to why we would not be able to make a 15-day turnaround. But we don't do everything on Excel where I could just turn around and say, well, when these invoices come in, let me see them so we can process them quickly. It just doesn't flow like that. It takes a little bit longer for us to move. If this was going to be a disincentive for us, we would obviously have to make changes to that overall process, but that is just not a click of the fingers. We have 8 Aqua states that are using our processing system, and it's just not as easy as turning around and saying, hey, give me that invoice quicker so I can make a payment with my credit card. It would take some time to investigate, and we just don't think that a discount should be considered a penalty when we pay within standard industry terms all these other invoices. I understand if it was a late payment charge, we eliminate those. Discounts, we just don't feel should be a penalty.
All right. Thank you, Mr. Becker. I'll pause here to see if there are any additional questions. Commissioner Clodfelter, I see your hand is raised, so go ahead, please.
Thank you, Madam Chair. I don't know whether it's Mr. Junis or Mr. Becker who can answer the question, so I'll take the answer from either. Just sort of put this issue into the broader context of things. When in a general rate case, we establish the amount of working capital needed by the company, what assumptions are made at that point in setting the amount of working capital about payment terms for accounts payable? Are any assumptions made about anticipation discounts or not?
Mr. Junis, do you want to answer? Would you like me to provide what I know, and then I can resort back to, I think, Josh Howery, my controller, and rates manager, Dean Gearhart, are also on, so I can refer to them.
I would just say we do have Lynn Fiesel, our accountant, on this issue. I don't know if she has anything to add, but this is slightly out of my wheelhouse, so I will defer to our accounting staff or the company.
So Commissioner Clodfelter, I'll take an initial stab, and I'll ask for maybe Dean Gearhart to clarify the statement. The working capital calculation that's included in the rate case, or in a rate case, is, if I recall correctly, it's typically 1/8 of your O&M, of your operations and maintenance expenses. So when you say, would this be considered in there, our O&M that we pay on a recurring basis is in a working capital calculation. And a discount would be considered, I guess, if we took it, but it wouldn't be considered if we didn't take it. It's based on all of our normal operating expenses. And this is a capital item, so I don't think it actually would affect it, because this would be a discount on an item that is unitized and capitalized, that is directly included in rate base versus the working capital calculation.
Thank you for that clarification. That's helpful. I guess what I was trying to explore here was that if you've got a longer lag time between the date you pay an invoice and the date you collect from a customer, you're going to need more working capital during that period of time. If, on the other hand, you pay within terms, invoice terms, and that period is compressed to when you recover from the customers, your customers, you need less working capital. I just am interested in whether that issue gets dealt with in the rate case.
And may I make some comments? Okay.
Please, I'm looking for anyone who wants to answer.
Ms. Fiesel, please, for the record, introduce yourself.
Yeah, my name is Lynn Fiesel, accountant from public staff.
All right, you may proceed.
So, okay, thank you. So when we do the reviewing for a general rate case, we normally sample some invoices for OM expenses, including maintenance expense and other types of expense. And when we sample, we are not able to select a very large amount because of the size of all the expenses. But from the samplings we selected, we normally review their payment terms. And sometimes they make payment on, like, for example, if the payment term is 30 days, we will review whether they do the payment within 30 days. And sometimes they do, and sometimes they do not. Sometimes they pay early, sometimes they do not. And we will just review to make sure that at least they do the payment on time. So this is on a case-to-case basis. But I do want to add one of my comments is that if the company do not take advantage of the discount, like if the payment day is 30 days, and when they are able to take discount when they pay within 15 days and they do not, the company actually has the benefit of holding the money for 15 days within the company. And the company has the opportunity to invest this part of money in some other activities for the company's benefit. So the benefit is for the company regardless of how material the cost is. And in order to get this benefit, the price the company paid is that the company does not get a discount. However, if the company wants the customer to pay the discount in my opinion, the company get double benefits because the company is able to hold the money for a longer term to do some other investment for the company's benefit. And also the company does not pay the price because the company wants the customer to pay. So that is another reason why we think this is not reasonable for the customer to pay that discount.
If I may, Commissioner Clodfelter, just a couple clarifying items. This specific instance is on a capital item. It is not an O&M item, so that working capital does not
Okay.
relate to this at all.
I understood you in the earlier answer, and that helped me sort of avoid getting confused. Thank you.
Yeah, and then on Ms. Fiesel's response about the O&M, the discount, if there were discounts with other vendors, which again, I'm not sure there are. As I had mentioned, this is the first time I had seen it in my 13 years with Aqua, where I actually knew of a potential discount for an early payment terms. Not that they don't exist or haven't existed, I've just not seen them. And where we get I'm not sure I understand the double benefit, but we would be, I think the shareholder, given the way rates are set, if it was an O&M item, the rates are set based on normal payment terms, not incurring a penalty. So if we did take advantage of a penalty, that would be to the shareholder's advantage because our rates are based on not assuming there's a discount, that we pay everything within the standard payment term. So if we did reduce the O&M by taking advantage of a discount, that would go into our P&L during a rate year or during a normal financial year, and that would benefit our net income. That would not likely benefit the shareholder, or I'm sorry, the ratepayer, as the rates do not typically consider these discounts.
Thank you all. I just was interested in general context, so I appreciate the responses. That's all I have, Chairman.
All right. Thank you, Commissioner Clodfelter. Checking in with commissioners. Any additional questions for company or public staff on this issue? Commissioner Duffley.
Chair Mitchell, with Commissioner Gray's consent, I'd like to move this agenda item to executive conference.
I consent.
All right.
Madam Chair, this is Bob Bennett. Could I make one brief statement before you take a vote there?
You may, Mr. Bennett.
I'll be very brief. Again, the company views this issue as a matter of one of basically generic interest. This, to the company's knowledge, is the first time that the public staff has made an adjustment which equates a discount provision, if not utilized, a late fee. So now we have a late fee if the company does not take advantage of a discount provision, and also a late fee penalty if the company fails to pay in the, say, the normal 30-day period, if that's the standard. This is new. We ask, and you'll see in our comments that we filed, we ask on discovery if any adjustment like this had ever been made before, and there were no specific examples that the public staff could come up with. And we quoted the discovery response in our filing, so you can see that. So again, the company, as a matter of principle, disputes calling this a late fee, and we've laid out the case that we would like to make in favor of the company's position in our filing. But also, we've said that the public staff's issue here, raised in the context of a WISC surcharge case, should be denied here. And if the public staff wants to further pursue this, it should be addressed in a generic basis applicable to all public utilities if it is to be considered as a new standard of reasonableness. And we do think this is a new standard of reasonableness, and that's the position, and that's all I'd like to say. Thank you.
All right. Thank you, Mr. Bennett. I actually have one final question. Mr. Bennett, you made me think of one last question. I'll direct it to Mr. Becker. Mr. Becker, the discount here is 2%. I believe it's 2% of total invoice. Is that correct?
I'm going to, if you don't mind, if I could defer to Mr. Gearhart or Mr. Howery.
All right,
I thought it was
anyone,
just on the cap, I thought it was just on the equipment, but I'm not positive.
Well,
Mr.
this
Gearhart?
is, hi. This is Dean Gearhart with Aqua, the rates and planning manager. The 2% discount just pertains to one particular vendor in this particular case. Was that the question?
well, it's 2% of the total invoice amount, right?
I believe that's the case. I went through and started itemizing the invoices. I think they don't include it on the tax. It's on the item itself. So maybe not the
Understood.
entire invoice amount.
Right, okay, so
Yeah.
whereas a late, can you help me understand sort of what the typical late fee looks like? Is it similar? Is it 2% or 1.5% of total invoice, or is it a flat fee? What is industry standard for a late fee to the extent there is one?
From my experience, that varies quite a bit. It's vendor by vendor. 2% probably isn't a terrible estimate to use, but we haven't really done any, I haven't really done any research on that.
Okay. All right. Thank you, Mr. Gerhart. All right. If there are no further questions from commissioners, I'll pause here just to confirm that there are not. I'm not seeing any. We've got a motion from Commissioner Duffley. If we can get a second, I'll call for a vote on that motion.
Second.
All right. All in favor, indicate with an eye.
Aye.
Aye.
Is there anyone opposed? All right, Commissioner Duffley's motion that we move to this item into executive conference is approved. All right, thank you, Mr. Junis. Thank you, Mr. Becker. All right, Mr. Bennett.
Madam Chair, one further thing, if you will permit me to do so. The company has asked that in view of this contested item and in view of the fact that we know how busy and clogged the commission's dockets are, we're asking you to go ahead and issue an order which approves everything that is not contested. And in this case, it is simply the 1-2% adjustment that we've been discussing. So we'd like you to go ahead and approve the public staff's proposal as it currently exists with the rates to be effective on January 1 of this year. And then issue a second order which deals with the 2% adjustment, and it's whichever way you rule. If you rule in the company's favor, that could be handled in the annual true-up process. But again, we would request that you go ahead and issue the order to allow the company to implement the surcharges for the issues that are not being contested.
All right, thank you, Mr. Bennett. We'll take that request under advisement. All right, let's proceed now to public staff water item P2. Ms. Darden.
Good morning. Lindsay Darden, engineer in the public staff, water, sewer, and telephone division. I'll be presenting water items P2, P3, and P4 together today. Water items P2 through P4 filed by Carolina Water Service of North Carolina and docket numbers W-354 subs 366, 367, and 376 are notifications of intention to begin water or sewer utility service in an area contiguous to a present service area and for approval of rates. The public staff recommends that the commission issue the proposed orders recognizing the contiguous extensions.
Move approval P2, P3, and P4.
Second.
All right, it's been moved and seconded that the items be approved as recommended by the public staff. Are there any questions or discussion on the motion? All right, hearing none, I'll call the roll for a vote. Indicate your support with an aye and your opposition with a no. Commissioner Gray.
Aye.
Commissioner Clodfelter.
Aye.
Commissioner Duffley.
Aye.
Commissioner Hughes.
Aye.
Commissioner McKissick.
Aye.
For the record, I support the motion as well, and the motion carries. All right, thank you, Ms. Darden. All right, the commission has before us our minutes from the January 3rd, 2022 staff conference for approval. I'll take a motion, please.
So move.
Second.
All right, any questions or discussion? All in favor of approving the minutes indicate with an eye.
Aye.
Aye.
Anyone opposed? All right, minutes of January 3rd are approved. Any additional business for the commission this morning before we adjourn? Okay, hearing none, we'll be adjourned. Let's go off the record. Thank you very much, everybody.